talk a little bit about this housing market, in particular on the buying side and first-time home buyers. My name is Josh Renicky. I'm a realtor out here in Sarasota, Lakewood Ranch, Florida, and I'm working with a few of those right now, and it's not easy for them. You know, it's very frustrating. We just got done with a crazy seller's market. The last 12 to 18 months has been nuts, and that causes a lot of buying fatigue. You know, a lot of these buyers are looking to buy a home, they're renting, feeling they're throwing money away, which is understandable, and they're getting outbid. You know, cash buyers are coming in and scooping everything up, going way above asking price, and that's frustrating because you kept making offers on homes and you couldn't get them. The prices were too high, you couldn't afford the area you wanted, and now it's opposite. You know, prices started coming down, but rates have gone nuts, and so now you have 7% interest rates, which then lowers the value you can afford, makes your payments more expensive, and that's frustrating. You know, a lot of these homeowners are sitting on high 2-3% rates, and that's just another thing that's going to cause fatigue. You know, why me? Why do I have to buy at a 7 when they had a 3? But if you are renting and you feel like you're throwing money away, I mean, you can't find the deals out there. A lot of these builders are panicking. You know, they were trying to chase that market with this inventory, and they just shot houses up in a crazy amount. You know, so a lot of those houses are sitting now because the market flipped. A lot of decreases. They're panicking. They're offering these red tag events. I just went under contract yesterday with one of my buyers. I mean, they're buying down the rate for you. So they're giving you 5.5, 5.75% rates, $15,000 flex cash you can use in any way you want, $10,000 towards closing costs. So to get a new construction and those incentives is very doable. And in my opinion, if you are renting, you're wanting to buy, if you're wanting to start a family, you have a small family, you're growing, I mean, you can't put a price on that, in my opinion. It might be a little more expensive monthly, which you got to do the math and figure that out for yourselves. But you know, that interest you're paying per year, that's tax deductible. You're building equity in the home. You know, when you put the down payment, right when you move in, you know, the value of your home is already more than what you owe on it. And if you're going to be there long term, not only can you know, they say marry the house, date the rate, you can refi down the road, but if you're gonna be there long term, which a lot of people are, if you're a young family or a first time home buyer, I mean, let's be honest, that the value of your home is gonna appreciate over time. I mean, it's different than if someone's trying to invest and flip. Right now that's tough, but a 7% rate, it's not fun to look at. It can be a little more expensive and you can't afford what you wanted to before, but long term, it can work out for you. Like I said, it's hard to put a price on that. So use a realtor, do your homework, and we can find you something. But thanks for tuning in. Subscribe if you can. Any suggestions, what you want me to talk about, I'm all ears. Bye.